Level 1. The Accident. It's 11:47 p.m. on a Thursday, and you're 3 hours deep into a rabbit hole you never planned to enter. A YouTube thumbnail caught you. Bold red text, a stock chart going vertical, and a guy who looks 24 claiming he turned $1,000 into $47,000 in 6 months trading options. You don't know what a call option is. You don't know what a strike price means. But something about the way this guy talks makes you feel like you've been living with a blindfold on. By 1 a.m., you've downloaded a brokerage app. The interface is a wall of numbers, ticker scrolling, percentages flashing green and red like a casino floor that never closes. You buy one call option on Tesla for $84. You don't know why Tesla, you just recognize the name. 18 minutes later, it's worth $121. You haven't done anything. The stock moved $3 and your option jumped 44%. You stare at your phone in bed, heart hammering, and you think the thought that will quietly destroy the next 2 years of your life. This is too easy for people not to know about. You spend every free hour for the next 3 weeks consuming Greeks, implied volatility, iron condors, theta decay. The words sound like spells from a language you were born to speak. You find a Reddit thread with a strategy someone claims prints money on earnings plays. You screenshot it. You study it like scripture. You deposit $2,000 of savings you were keeping for a trip to Bali. That trip will never happen. Your first real play is Netflix, 2 days before earnings. You buy calls based on the Reddit thread. Earnings drop. Netflix misses. Your options open the next morning worth $11. You lost $438 overnight while you were sleeping. You sit on the edge of your bed and feel something you can't name. It's not anger. It's the first time the market made you feel stupid. It won't be the last. Level 2. The student who knows everything. Your solution to losing money is education. More of it. Faster. You buy a $149 course from a guy with a rented Lamborghini in his thumbnail. You join 3 Discords. You follow 11 traders on Twitter. You learn about spreads, debit spreads, credit spreads, calendar spreads. You build a color-coded spreadsheet with entry criteria, exit criteria, and risk limits. For 6 days, you follow it perfectly. On day 7, you see AMD moving, and it's not in your plan, but it's going and it's going now, and you can't just sit here. You throw $600 at weekly calls. AMD reverses 4% the next day. You don't log that trade in your spreadsheet. You tell yourself it doesn't count because it wasn't part of the system. This is the lie that keeps the cycle alive. Discipline, then impulse, then loss, then silence, then discipline again. You think the problem is your mindset. You start journaling. You try waking up at 5 a.m. to meditate before the market opens. But here's the part nobody in those Discords will tell you. You're executing a strategy that has no statistical edge. You're being disciplined about randomness. A coin flip with a spreadsheet is still a coin flip. 7 months in, you've deposited $4,200 total. Your account shows $1,100. You call it tuition. You're right, but the lesson isn't the one you think it is. Level 3. The Silence. Somewhere around month 9, you stop trying so hard, and something shifts. You stop buying courses, you stop following signals. You sit in front of the charts for 4 hours a day and place 0 trades. You just watch. You notice things the YouTube gurus never mentioned. How options prices inflate before earnings and collapse after, regardless of direction. How certain stocks move in a rhythm during the first 30 minutes and then flatline until close. How the crowd piles into one direction and the real move happens in the opposite. You build a system so boring you're almost embarrassed by it. One setup, one stock, one time of day. You backtest it across 14 months of historical data. It wins 54% of the time with an average return of 2.3 to 1. It will never be a YouTube thumbnail, but it's yours. First month, you take 9 trades. 7 follow the rules. 5 of those win. The 2 trades where you improvised both lose. You end the month up 8%. You feel something unfamiliar, not excitement, certainty, quiet, boring certainty. You delete the Discord apps. You unsubscribe from every trading channel. The noise that used to feel like oxygen now feels like poison. Your account crosses $3,000 for the first time. You don't screenshot it. That's the moment you know something has actually changed. Level 4. The weight of real numbers. 6 months of consistency. You've had drawdowns. One ugly 11% drop over 2 weeks that made you physically sick. But you didn't break. You didn't revenge trade. You didn't double down. You sat through it and came out the other side. That restraint is the most valuable skill you've ever developed, and no course ever taught it to you. You add capital, $15,000 now, and suddenly 8% a month isn't an abstract number, it's $1,200. You feel every losing trade in your chest. A $400 loss used to be a number. Now it's a week of groceries, but you hold the rules. You find a small group online, 5 traders, no flashy screenshots, just journal entries and honest breakdowns of mistakes. You realize that everything you consumed in year 1 was entertainment marketed as education. You were the product. Now you're the practitioner. By month 14, you're managing $28,000. Your returns are auditable. You start thinking about $100,000 not as a dream, but as a math problem. Compound 7% monthly, account for drawdowns, adjust position sizing. For the first time in your life, you're planning from evidence. It feels like standing on solid ground after 2 years of swimming.
Level 5, the cost nobody mentions. You're running $120,000 now. Some of it is yours, some is from 2 people who watched your track record for 6 months before they trusted you with $1. You've signed agreements with drawdown limits and profit splits. Your mornings now start at 5:30 a.m. You check overnight futures, scan your watch list, review yesterday's journal, and sit in silence for 20 minutes before the opening bell. You've stopped drinking entirely. Not for health, because your data shows that even 1 drink the night before correlates with a 23% increase in impulsive entries the next morning. You've stopped explaining what you do at parties. When someone asks, you say finance. If they push, you say risk management. If they push harder and ask if it's like gambling, you say kind of, and change the subject. The loneliness of knowing something deeply that nobody around you can even frame a question about is a tax you didn't budget for. You have 18 months of living expenses in a separate account that you never touch. The market is for growth. That account is for sleep. Level 6, the machine. $400,000 under management. You have a part-time analyst now, a compliance checklist that's thicker than your first journal. Your positions are larger than your first year's total deposits, and you don't flinch anymore. Somewhere around $200,000, the number stopped feeling like money. A $30,000 position isn't $30,000, it's 7.5% exposure. This dissociation isn't a flaw, it's the only way you can function. If you let yourself feel the weight of the number, you'd freeze. Your college friends have stopped inviting you to Thursday nights. You're always half somewhere else, mentally running through a position or a macro event or a volatility shift. You aren't sad about it, but you notice. Level 7, the architect. You don't place trades anymore. You built the system, hired the people, and defined the rules. 3 full-time team members, a developer who coded your custom scanner, an analyst who flags setups, a risk officer who can overwrite any position. The first week you stepped back from execution was agony. Your hand kept reaching for the mouse. You kept seeing setups your team didn't take, and you wanted to scream, but you held, because your data showed that your team, running your system without your emotional interference, outperformed your solo execution by 13% over the test period. You are no longer a trader. You are infrastructure. Level 8, the quiet room. It's 3 p.m. on a Wednesday, and your office is silent. You've taken 1 call today. Your systems are running. Your team is managing $18 million in client capital across 4 strategies. You don't say that number anymore. It just is. You eat lunch alone, not because you have to, because the silence is where the clarity lives. Your phone buzzes. A new analyst, 23 years old, sends you a message full of confidence about a setup based on a pattern he found online. You read it and smile. You remember having that exact certainty 7 years ago. You type back slowly, guiding him toward the flaw without killing his fire. Somewhere right now, someone is lying in bed at midnight, watching a YouTube video about options, heart racing, thinking this changes everything. He's wrong, but he'll learn. And it will cost him exactly what it cost you, and he'll stay anyway. They always do.